Energy giants like Exxon are slashing thousands of jobs, and for Texas, a powerhouse of the U.S. economy, they're starting to crumble. As you're about to see, this is just the beginning of a ripple effect that's going to spread all across the nation. Plus, tonight's show is brought to you by MindWalk Holdings. You can find them on the NASDAQ and symbol HYFT, and they just announced a major advancement in their AI-designed therapeutics program. Stay tuned to the end of the show or check out the pinned comment or description for more information. Because I want you to understand why what happens in Texas matters. Because when oil companies start to lay off, it means the rest of the country is soon to follow. In fact, if we look at historical parallels, when oil companies start to lay off, it can affect over 200,000 jobs outside of Texas. And that's if we don't head into a recession. Let's take a look because Exxon has announced 2,000 job cuts in global restructuring, representing around 3 to 4% of its global workforce. Now, this follows energy giants like Chevron, ConocoPhillips, and BP, all who have announced thousands of layoffs in recent months. Now, you may recall that President Trump said he wanted lower energy prices. They said, look, no, you don't. Because if we see energy prices fall or stay below the break-even point for too long, what happens is oil companies begin to defend their margin and they start to lay off thousands of employees. It's not just the workers, it's also the amount of money that energy companies spend into the Texas economy and that flows all over the country. In fact, Texas as a state derives about 40% of its GDP from energy-related activities, and that's a staggering number. So we can see that when the energy sector starts to pull back, it's a major red flag for our economy. When Texas goes, well, the rest of the country is soon to follow. And the reason we're seeing this is the break even is somewhere right around $63 per barrel. So if prices stay below that, and they've been underneath that here recently, then energy companies are going to continue to have to cut, and in big ways. And we're not talking small numbers, we're talking tens of billions of dollars. And unfortunately, at this stage, it means jobs have to go. And we talk about the spillover effects this has on the broad economy. Let's turn to the Dallas Fed manufacturing survey. Now, we got this yesterday, and you can see the impacts are huge. In fact, the index resumed its slide, dropping to minus 8.7 in September from minus 1.8 in August, indicating again further contraction. And there's a strong relationship between the price of oil and Texas manufacturing. So as we see oil prices remain depressed, this spills over into the manufacturing sector. And for a lot of Texans, it means they're going to face further job losses outside the oil patch. But let's take a look at these business indicators because I want you to see, look at new orders now going into contraction at minus 2.6. You can see the growth rate of new orders, that's in contraction. Unfilled orders also in contraction. And look what happens. It spills right over into the employment sector. You see minus 3.4. That is a huge indication that we're seeing further layoffs. Now, the hours worked number jumped. That's because there were fewer employees. So obviously, that means those that did have a job saw more hours at the sacrifice of those getting laid off. But it's not just the manufacturing sector. It spills over into the services side too. All of a sudden, revenues plunged to minus 2.4 from 8.6 in August. My friends, that is a huge drop. Let's take a look at the business indicators because you can see it's not just revenue that dropped. Employment dropped, part-time employment, and even hours worked dropped. And we know there's a strong relationship between hours worked and the labor market. So as those continue to decline because demand falls, we're going to see more and more Texans out of work. And again, it's just going to spill all across the country. In fact, we can see it in their retail sales data. Check this out. Retail sales there crashed minus 17.2, and this was down from minus 2.1 in August. Again, let's take a look at the indicators. You can see that means it's employment down, part-time employment, and hours worked plunging in the retail space. And you can just see the spillover effects this is going to have because what we're facing is an economy with too much inventory. In fact, we could argue there's too much oil. And what happens is demand falls. And in this case, it's falling faster than production. What this means is it goes all the way up the supply chain to the manufacturing level. And next thing you know, we're going to see major layoffs. And again, the retail space is a leading indicator here. It's a huge red flag. Let's take a look at this next chart of real retail sales in blue. Gets the unemployment rate. And you can see very clearly what happens in Texas is going to spread all across the country as retail sales drop. What we face is a rising unemployment rate. And what we're seeing in Texas right now, thanks to a lot of layoffs in the oil patch, what it means is retail sales are going to continue to plunge, jobs are going to go away, and again, it's going to spill all across the country. In fact, we're seeing signs of that already. We got the JOLTS surveys today. Let's take a look because U.S. job openings barely increased and a sign of stable labor demand. And I can tell you, my friends, it's not going to stay stable for long because the belief right now is the economy and the labor market have plateaued. But when you start to look at these leading indicators, when you see the price of oil, when you see what these energy companies are doing, it's telling us where the rest of the economy is going. And that's why Texas matters. Available positions increased to 7.23 million from a revised 7.21 million reading July. Again, a sign now there's some equilibrium in the labor market, but that's not going to hold on for long. Because economists are closely watching for any further signs of softening as employers have pulled back on hiring, it's taking longer for unemployed people to find a new position. So what we're clearly seeing in Texas from the Dallas Fed surveys is there a pullback, and we can see it centered right in the energy sector. But the real issue is there isn't enough demand to give hope to the unemployed to come back into the workforce. And we can see that very clearly. Let's take a look at the JOLTS chart versus continued claims. And you can see as job openings decline, which we know is going to happen in Texas due to all these oil layoffs, what you can see is continued claims are going to rise. And that's the expectation now is everybody hopes the economy is plateauing based on what we're seeing in the JOLTS survey. But what we're really facing is the beginning of the next move down. And that's what we talked about yesterday. The risk of a government shutdown is going to have a massive impact on the labor market. And the timing of this, well, I think could not be worse. As Trump now threatens a lot of firing, his shutdown deadline looms. And the problem is the economy. And this is why I wanted to show you what was going on in Texas. We cannot absorb all of these workers. Now, on the forefront, they should be furloughed. The problem is, if they get laid off, if they get fired, well, it's going to have a massive impact. Now, just in a furlough, economists estimate as many as 640,000 workers could be sidelined. This would lift the unemployment rate by 0.4 points to around 4.7%. Now, that would be a big uptick for a month. But if they get fired, well, that means we're facing an unemployment rate that's going to get stuck around 4.5%. And we already know as more people lose their job, their spending power declines, and it backfeeds all through the economy, just like what we're seeing in Texas. So the risks right now are high. The longer this shutdown goes, the bigger the impact energy prices are having on the Texas economy. You can see very clearly where the U.S. economy is headed. And there's no doubt because as we look to consumers, they're seeing confidence is falling now to a 5-month low on job concerns. In fact, the Conference Board noted that a gauge of present conditions fell 7 points now to the lowest level in a year. Keep in mind, we were supposed to see a second half rebound, but consumers are saying not going to happen. While a measure of expectations, that's looking out forward 6 months, also dropped in September. So as we look forward to the holiday season, what we can see is where sentiment goes, the economy follows. Let's take a look at this chart of the University of Michigan Consumer Sentiment Survey, that's shown in red against real retail sales in blue. You can see very clearly that retail sales start to slow down, and then when you see a big drop in sentiment, retail sales fall right alongside it. And that's the risk we're facing right now because we've seen a big drop in sentiment, but we haven't seen a drop in retail sales until we started to see what's going on in Texas. You saw that big plunge in retail sales. Again, another red flag. So as we look to Texas, we're seeing energy companies laying off and in a big way. And those jobs, my friend, aren't coming back anytime soon. And you can see it spilling over all across the state, and that's going to spread outside its borders to the rest of the country. The risk we're facing right now is that plateau that everybody's hoping for and seeing in the lagged government data is really indicating that we're about to move to another leg down. The problem I fear is not just going to be a couple 100,000 jobs lost, it's going to be millions as we head into the next recession. But something I'm bullish on, that is the stock for our sponsor for today's show, MindWalk Holdings, because they've been a big winner for our viewers. You might remember them. They are the former company that used to be immunoprecise antibodies under the symbol IPA, now on the NASDAQ under the symbol HYFT. Everything you need to know in the pinned comment and description below. Because MindWalk Holdings, you know them as the AI whizzes revolutionizing drug discovery. Well, today we're zeroing in on their hottest update yet from just a few days ago, a game-changing advance in weight loss and anti-aging meds. This could be huge for staying fit and useful longer. And MindWalk's Lens AI platform just uncovered a smart connection between blockbuster GLP-1 drugs, think Ozempic for weight control, and a pathway to fight aging. They're crafting a first-of-its-kind dual treatment. A GLP-1 agonist teamed up with a GIP booster. This combo aims to amp up fat burning while dialing down inflammation and boosting cell repair for real longevity gains. Now imagine your weight loss meds not just helping you drop pounds, but also keeping your energy high and your body strong as you age. And MindWalk's design uses AI to tweak these drugs for longer lasting effects with fewer side effects. Early computer models show promise in hitting multiple targets at once, a step toward treatments that tackle obesity and aging head on without the usual trial and error headaches. And tying into this excitement, MindWalk's latest quarter smashed records with a $7.6 million in revenue, a 45% jump year over year. They're cutting costs smartly and stacking cash for more R&D, just like this GLP-1 project. It's proof their AI just isn't informative, it's profitable and scaling fast. The GLP-1 sector is exploding, valued at $53 billion today, and set to grow at 17% annually through 2030 as more folks chase weight and wellness wins. Layer on the $60 billion longevity market by decades in, and MindWalk's dual agonist play positions them perfectly in this trillion-dollar health shift. And unlike pure AI players, MindWalk blends their tech with in-house labs and ready antibody pipeline. This gives them the edge in turning discoveries like this GLP-1 GIP combo into real therapies quicker than competitors. No one else has this exact anti-aging angle locked in yet. And with this GLP-1 longevity push rolling forward via Lens AI, MindWalk's set to pioneer meds that redefine healthy aging. Revenues climbing, markets are ripe, and this is innovation you can feel. Check them out on the web at mindwalkai.com and under the NASDAQ and the symbol HYFT. And as always with any company we feature on the show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades and use risk control levels. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.